I never like to be the guy to say, I told you so. But honestly, today, I think it calls for it. I have to say it. I told you so. We're looking a month ago on the videos that I posted, and you can see two names on here. One of them, where I'm highlighting on my mouse, says Carvana stock will go to $0 right here. Another one says Carvana stock will go bankrupt. I posted these back to back from each other, and as you can see, this was posted 1 month ago. Now, it's not fun to talk about stocks that are going bankrupt, but this story is one that I have to share with you guys, because this is a wild one. Stocks go bankrupt or have financial troubles all the time, but Carvana is one that is truly special. And what I want to talk today, because I've talked so many times before about the numbers, the profitability, and why I think this company's going bankrupt, but one of the main things I want to talk about today is the story, because while you might be thinking, okay, this company's going bankrupt, it's likely tanking, today it's up 29.5%. We're going to talk about why that is, what happened, and what we can expect moving forward for Carvana. Because many investors might be looking at this price now. You look year to date, you see at the beginning of the year, the stock was around $250. Today, it's a $5 chuck. It's $4.96 to be exact. And this company does still look like it's growing revenue. It's generally trending up. Over time, it's going in the right direction. But we're going to talk in this video why it has so many other problems that investors and retail investors like myself are not paying attention to, and why you should not be buying this stock no matter what the price. If anything, you should maybe even consider shorting it. So it's going to be a fun one. We're going to jump into Carvana and tell this bankruptcy story. But before we get into all that, we have to talk about today's sponsor, MooMoo. MooMoo is a new up-and-coming brokerage that is taking the world by storm. Commission-free trading, level 2 data, advanced technical indicators, earnings calendars to see the date of financial statement releases, and institutional tracking to follow Warren Buffett's portfolio are just a few examples of what MooMoo has to offer. With this being my first sponsor in the channel, I have fully vetted their company and stand behind their vision. MooMoo currently trades on the NASDAQ under ticker symbol FUTU for FUTU and is SIPC insured. If you sign up below using my special referral link, you can get anywhere from 1, 10, or even as high as 20 stocks for signing up when you use my special referral link down below in the description or in the pinned comment down below. Free stock amounts can be as high as $1,000, so sign up now using the link in the description or pinned comment down below. You would help support me and my channel by doing so and give yourself an edge in the world of investing. Thank you so much, MooMoo, for sponsoring this video. Now back to the content. Let's go ahead and start with the main article here that says Carvana, the Amazon of used cars. Don't even really agree with that statement, by the way, but whatever. The Amazon of used cars is collapsing. The Amazon of used cars, i.e. Carvana, lost a third of its market cap value on Wednesday, and its payment deadlines loom. Now yesterday, just a day ago, if we hop in here to Qualtrim and we look over the last month, you see that yesterday the stock dropped 43%, its biggest percentage drop on record than most in the company's history. It dropped from 671 to yesterday's 383. It did recover a bunch today, and we're going to talk about why that is in just a second, but yesterday was a horrible day for Carvana. And it came from news like this. Wedbush downgrading Carvana to underperform from neutral on rising bankruptcy risks. Cuts price target from $9 down to $1. It's a pretty significant downturn, and considering that even after the big drop, the company is $5 a share, that's an 80% downturn from where we're at now. A $1 price target, which is just crazy to think about. Now we see articles like this that says Carvana creditors ink cooperation agreement ahead of expected cash crunch for used car seller, per Bloomberg article. Now you can see here it says Carvana company creditors led by Apollo Global Management Incorporated and Pacific Investment Management Company inked an agreement to team up in credit talks with the company in a move to avoid the conflicts that have arisen in other debt restructurings. Firms holding 70% or about $4 billion of Carvana's unsecured debt have signed the cooperation agreement, the report said. Carvana has been burning through cash, causing creditors, including Apollo Investment Incorporated, as well as BlackRock, Ares Management Corporation, and Knighthead Capital Management, to come with a pact to restructure this debt. Now, this is what's interesting. Yesterday, when the company dropped 43%, it came off of the back of this company announcing the restructuring of its debt and meeting with bankruptcy lawyers. This is obviously a situation where the company is burning cash. Now, let's prove this. Let's look at the numbers. You can see that every single quarter, it burns hundreds of millions of dollars. At some point in this quarter, it even burned $1.3 billion. But in the most 3 quarters throughout 2022, first quarter, it burned $813 million. The second quarter, it burned burned $35 million. That was a better quarter. Actually, that's its best profitability quarter since the company's been founded. So there's that. And then you also have a negative $188 million right here in the most recent quarter. So the company's burning cash. And this can be seen from the debt pile that is continually going up and the cash pile that's continually going down. We'll talk about that in just a second. But long story short, yesterday they're meeting with bankruptcy lawyers and the stock plunges 40% In this article right here, stock plunges as cash crunch worsens. It talks about how much it dropped and why it dropped, and it says that 70% is held between 10 different firms that are trying to restructure this debt and just to get some of its money back, and they're negotiating these terms in this deal right now. Now, right here in this article, it says a look into Carvana's debt. It says, according to Carvana's most recent financial statement as reported on November 3rd, total debt is $7.4 billion, with $6.62 in long-term debt, $788 million in current debt. Adjusting for the $316 million in cash equivalents, the company has net debt of $7.09. However, if we go a little further here, it says, let's define some of the terms we use in the paragraph above. Current debt is the portion of a company's debt which is due within 1 year, meaning short term, while long-term debt is 1 year or further out. Cash equivalents include liquid securities that mature in 90 days or less. Total debt equals current debt plus long-term debt minus cash equivalents. Now, it talks about how shareholders look at debt ratios to understand how much financial leverage a company has. Carvana has $9.62 billion in assets, therefore making it a debt ratio of 0.77. Generally speaking, a debt ratio more than 1 means a large portion of debt is funded by assets. As the debt ratio increases, so does the risk of defaulting on loans if interest rates were to increase. Different industries might have different thresholds of tolerance for debt ratios. A debt ratio of 25% might be higher for one industry, but average for another. And if you look right here and you compare their long-term debt, their current debt, and their cash and cash equivalents, you can see that little bitty dark blue line right there is the cash equivalents. The current debt is the orange, which is significantly larger. Now remember, current is 1 year or less, so it's coming due now. And then you have the big dog, the big light blue line of long-term debt. Becomes pretty apparent there. Now, what's interesting is you see how this company is now rallying. Now, why is the stock rallying? Why is it recovering so nicely? Well, that's because the company announced that you shouldn't be worried. You shouldn't be worried about bankruptcy fears. They're not focused on bankruptcy. They're actually focusing on profitability. Now, here's what was written today about this company rallying so high. Carvana said in a statement today that it was focused on executing the, quote, plan to profitability. And then they said, in no way does today's news change that strategy. It said Carvana is not involved in any cooperative agreement amongst bondholders and will not be addressing any questions that arise from actions taken by such bondholders. And this is what I consider a CYA opportunity. That stands for cover your butt. You can fill in the blank. Don't want to get demonetized on YouTube. But long story short, this is just flat out. You know what? Let me put it this way. It's oftentimes that you see companies that are going down in price, that are struggling, that they take a lot of different paths. They could either embellish their numbers a bit. They could say, oh, we're actually doing a lot better than we thought. Sometimes they admit defeat. Sometimes they talk about how they are planning to go to a path of profitability. But then there's other times where they're just straight up lying. Why would they be seen talking to bankruptcy lawyers and restructuring its debt 24 hours ago? And now today the stock rallies up 30% because they're saying, oh, we're fine. No issues here. Everything's perfect. The stock's going up 30% now. It's okay. Everything go to the moon. No need for the stock to go down, y'all. And now it's recovering. You can see the charts updated now. And now it's recovered a huge percentage of yesterday's losses. And it reminds me, and I know this is a completely different situation, it reminds me of the SBF, the Sam Bankman-Fried situation we just saw the other day. Sam Bankman-Fried, like many crypto companies, is saying, yeah, everything's fine. No worries of bankruptcy here. No need to flee your money out of our platform. This is an opportunity to invest. This is the time when you want to be buying. And look what happened shortly after the company files for bankruptcy. So it's reasons like this. A month ago, I made videos talking about why Carvana is going to go bankrupt, in my opinion. If you have any sense of financial knowledge, if you look at these numbers, something I mentioned before in my previous videos, is that Carvana experienced the biggest car boom in history in 2021. And if you can't make money as a used car seller on Carvana during the biggest car boom in the last century, then how could you ever expect to make a profitability during normal times or even in a recession. Look throughout all these numbers of 2020 and 2021, and these were some of their biggest losses. So now that we're facing recession fears, this is a time where Carvana should be starting to pull back, but honestly, their losses are not going to be able to keep up with the amount of cash they have on hand. In the most recent quarter, like I said, they have $316 million in cash, and if you put this side by side, the big red debt pile, it becomes pretty apparent at how quickly this company is taking on billions of debt that will never get paid back. So this is why you should invest in companies that grow for the long term, have profitability, compound their earnings, and reward shareholders. The best opportunity, in my opinion, the best scenario of this company not declaring bankruptcy is they dilute the crap out of shareholders by tens or even hundreds of millions of shares and hope that they can stay afloat till profitability comes in play. Now, this is not going to happen, in my opinion, but we'll be staying with the story, so stay tuned. I'll be following along the way. But thank you guys so much for watching. Check out all the stuff down below in the description. Thank you, MooMoo, for sponsoring this video, and I'll catch you guys next time.